Hi everyone, I'm Nikhil Prashad Singh, Legal Associate at SecureDApp, and today we'll explore how Singapore, via the Monetary Authority of Singapore, that is MAS, regulates stablecoin, digital payment tokens, digital token service providers, licensing, consumer protection, and all those recent changes. So we'll look into what's permitted, what's not, major risk areas, and how to prepare. So first of all, we will start with the regulatory framework and the laws and the regulatory scope. So the main pieces of the legislation governing crypto tokens in the Singapore are the first of all there is a Payment Services Act 2019, that is the PS Act, and second one is the Securities and the Futures Act, that is the SFA, and other related laws. So under the PS Act, that is the Payment Services Act, the digital payment tokens, those are DPTs, are regulated. These includes cryptocurrencies used for payments, swap exchanges, etc. Okay, so MAS licenses and regulates the service provider under the PS Act. There is also a newer regime from 30 June, that is 2025. So regulators introduced requirements under the Financial Services and Markets Act 2020, that is FSMA, or the Digital Token Service Provider, DTSPs. So especially those providing services to overseas customers. Okay, so MAS clarified that DTSPs operating solely from non-Singapore customers will need licenses from must ease such operations. Now, third of all, there is for stablecoins. Monetary Authority has dedicated a stablecoin regulatory framework. Okay, so which overlays on the PS Act and when stable coins are issued in Singapore. So only and only when stable coin that meet the monetary authority's criteria may use the label as MAS regulated stable coin. Now, what about the digital token service providers and their licenses? So from the 30 June 2025, DTSPs have a new regulation. So DTSPs are firms that provide with services with the digital token, and these include digital payment services and tokens representing capital markets products. So under the FSMA or the DTSPs regime, DTSPs must be licensed by the MAS and if they provide regulatory services. Okay, so the key change from that is from 30 June 2025. So DTSPs serving exclusively customers outside the Singapore and providing DPT or tokenized capital market product services must obtain a MAS license, and if they do not do so, they must ease these activities. MAS has stated that the licensing threshold will be high and the licenses for purely overseas customers, DTSPs, will generally not be granted except in very limited circumstances. Now, third of all, it is they have to provide serving customers within Singapore are already regulated and under existing regimes. So those do not see a change in that core regulation, but now cross-border operations are more tightly controlled. Now, third of all is the stablecoin regulations and the MAS regulated stablecoin framework. Okay, so Singapore's stablecoin regulatory framework announced in 2023, implemented in part since, applies to single currency stablecoin, that is SCAS, and pegged to either the Singapore dollar or any G10 currency. So only those issued by Singapore can be called as MAS recognized, and it's using the MAS regulated stablecoin label if they meet this criteria. So these key requirements or the stablecoin issuers under the framework are: first of all, issuers must meet the capital resource requirement. Second of all, the full reserve backing. They have to be highly liquid, low risk, and reserves assets. Third of all is the segregation of the reserves asset from the corporate assets. Fourth of all is the valuation of marking to market. And fifth of all is the restrictions on those issuers, what they do and what they can't do. So issuers cannot engage in the risky extra activities like lending, staking, or the investing, and the reserves in the risky requirements. Okay, and that may jeopardize the reserve stability. So only these stablecoin meetings, all the criteria can be labeled as MAS regulated and stablecoins. Okay, so the others are not allowed to use that label. in any way. Now, what about the consumer protection and the safety of the consumers? Okay, so first of all, MAS has imposed user protections requirement on DPT service providers. First of all, there has to be a custody. Provider must keep customers' assets under the statutory trust separate from their own assets. And second of all, there is the segregation of the assets and the daily reconciliation. So ensuring customer assets are clearly separate and that records are reconciled daily. Restrictions on certain business activity for retail customers. So lending or skating of DPTs by the retail issuers is restricted by MAS, and retail issuers shouldn't have access of these high risk exposures via the DPT provider. Second, there is the leverage margin trading. Options is typically disallowed for the retail customers. Okay. So, marketing and promotions to the public. AMS has guidelines on how limiting a DPT service provider may promote to the public under PS Acts, ads, social media, and other things, etc., etc. Now, also, the misleading promises. The promises must be responsible and transparent as well. Okay. So, in the recent changes, that is tighter regulatory scope that has introduced in 2024 from 2025. So these are that effective from 4 April 2024, amendments in the PS Act and the subsidiary legislations expanded MAS regulatory scope from that of DPT service provider to including defining custodial services for DPTs as well. These include transmission of DPTs and facilitating the exchange of DPTs even where the provider doesn't hold DPTs themselves. Now, the DTSP regime came into effective from 30 June 2025, and these key part DTSPs operating solely for overseas customers how need licenses or must cease such activity. Third of all is the MS clarifications. MS clarifications affirm that providers of the other token types, utility not representing payment tokens or capital requirements, capital market products are not covered by the DTSP licensing requirement. Also, investor protection enhancement have been introduced for DPT service providers, safekeeping, trust segregation, transparency, etc. Now, what can be these practical implications and what you as a team should do? So, first of all, you have to map your activities. You have to identify exactly what services you offer. Either you offer custody, either you offer exchange, token issuance, tokenized capital product handling, etc. So you have to must have your map out your activities. Now, second of all, you have to check what your licensing requirements are. So for overseas DTSPs, assess whether you can realistically meet MAS standards. Okay. Third of all, you have to design your reserves, how you are gonna manage your reserves. Third is the asset custody and segregation arrangement. So you have to segregate your assets and your custody so that you can meet the customer risk criteria. Third of all, you have to manage the AML and KYC marketing. And the last one is how you are gonna consider the cross-border implications. So this is how you will have to map your activities when you are going to get your license with the MAS, that is the Monetary Authority of the Singapore. So to summarize all this, MAS has built a comprehensive and increasingly tight regime and around digital payment token. And whenever you want to know something, you'll have to get in touch with them. So if you like, you can share this video, subscribe on our YouTube channel, and please come back again for more such videos. I'm Nikhil Prashad Singh, and thank you for watching SecureDApp's YouTube. Thank you.